Joining us right now is Wells Fargo Investment Institute President Darrell Cronk. Darrell, good to see you.
Thanks, Maria. Great to be here.
You hear anything that strikes you from Dennis this morning?
Yeah, I think it's interesting, and I think this is what the markets are even doing this morning. They're switching the narrative from what was expected, which was this sizable bazooka monetary response, to what comes next in fiscal. And I think it's probably a four-step process. Number one, we got the first one on March 5th when the president signed the $8.3 billion that went to the NIH, the CDC, right, to help fight the virus. Number two is grinding through right now, right? So it's helping families. It's probably going to pass the Senate early this week, signed by the president later. CBO is yet to score it. It's probably somewhere around $100 billion when you include the paid sick leave and unemployment benefits. So it's sizable, but it helps the workers. Stimulus 3, yet to lie before us, is probably some kind of a targeted fiscal package that is sizable. So sizable means it probably needs to be $300 to $500 billion of actual stimulus, somewhere around 1% of GDP growth. Just to put that in account, 2009's was $780 billion. And then Stimulus 4 is really the targeted stimulus to the industries, the ones you just mentioned and Dennis talked about. So energy, airlines, cruise lines, hospitality, those types of things. It comes probably in 4 different stages. It's the only way Congress can really address it. And I think that's what markets really want to see.
Well, and that's why I think markets rallied on Friday, because they saw the president there with all those CEOs around him, and they thought, okay, well, this is all hands on deck.
Right.
We're gonna get this. We're gonna get control of this. And yet the Fed making this emergency move.
Yeah, and I think it
puts everything in panic again.
But it's a classic surprise. No one saw it coming, and markets just, they have indigestion when they get a surprise. I want to just pick up on your last point, which is the quote-unquote bailout of those industries. Do you envision that being sort of TARP-like, which was the program that was created to sort of bail out the banks, or is it going to be a different model? Because the president was very critical of some of those, sort of corporate welfare.
Yeah, I think it's probably TARP-like, Mitch. I think it's something that resembles that. It's going to need congressional support and help as well. So it's not something that can be done unilaterally either by the president through executive order or through Secretary Mnuchin or certainly the Federal Reserve. So it's going to take that coordinated effort. I think the markets would be pleased if they saw something in that $700–800 billion total, but we'll see.
Darrell, what sectors do you guys like right now? I mean, the market's just been absolutely demolished. The selling isn't going to last forever. I mean, if we keep losing 1,000 points, 2,000 points a day, the market won't be here in a couple weeks. Yeah. So where do you guys see value at the moment?
Well, so we, a couple weeks ago, actually took down emerging markets, took down international developed equities, so things like continental Europe, Japan. Japan's in a recession. Italy is effectively in a recession. You could argue Germany's in a recession for all intents and purposes. We like large cap U.S. equities, mid cap U.S. equities, up in quality, up in market cap. Within the sectors, I think you can hide out pretty well in technology still. Rock solid balance sheets, most cash on the balance sheets, just really good quality companies. Communication services, and then selectively you've got to bifurcate consumer discretionary, right? Consumer discretionary, there are some that are sector or areas that are really going to benefit from what's going on, and others that are going to get hurt materially, like cruise lines, airlines, those types of things.
Would you stick your neck out and buy stocks here? I mean, the S&P is going to be down 9% right out of the gate this morning. What is it going to take to stop these markets from plummeting the way they are?
I think you need to see that fiscal stimulus, right, to answer the question of what's it going to take. Unfortunately, the House is in recess this week, so the earliest we can get the next package probably is a week from now, which markets are not terribly patient around that. We have been selectively buying some of those industries and stocks. We think you have to here. You're never going to call the bottom. It's interesting if you go all the way back to 1928 to 1930 and you look at recessionary market responses. Yeah. The average downside return on the S&P is 32%. The median's 24%.
Wow.
We're there, right? Markets are pricing in that recession.
Okay.
So you're probably getting close.
Thank you so much, Darrell.